Hello, this is Larry Tentarelli. I'm a full-time trader and the editor and publisher of the Blue Chip Daily Trend Report. And today I'm going to do a brief instructional chart study video, and we're going to take a look at an open position that I've got in Tesla. So I took the position on July 31st, and there was really a lot that went into this position, and I wanted to spend a few minutes. I've gotten really good feedback so far on these chart study videos. So I wanted to take some time, go into the chart and really study the position and take a look at where we're at right now. So we're going to come back to the chart in just a few minutes, but we'll start with the blog. So my website is Blue Chip Daily Trend Report, bluechipdaily.com is the web address. So we'll take a look at the blog, and there's a couple things. So I took the entry signal off the rising 20-day moving average. So we're going to take a look at that in a few minutes. Now, when I took the trade, and here's the screenshot. So it was July 31st in the morning, and I took the trade just under 1480. And at the time, I identified 1350 to 1400 as potential downside if there was any further volatility. And what we'll see from the chart was 1365 was the low. So the stock settled in right to the level that I identified when I took the position. I had a trend following stop. So my stop was under 1250, and it's important to understand. So anytime I take a position or when we take a position, it's important to understand not only the stock itself, the volatility, but also to understand ourselves and understand what we can sit through. So I held the position. There was a 7.7% drawdown. I held the position through the drawdown with no hesitation whatsoever. Once the stock broke out 1500 to 1550, I identified that as a key breakout level. We'll take a look at that. And then, so Tesla's been on the Blue Chip Daily buy list 9 times over the last 3 months, starting at $835. So we'll take a look at a few things. So we'll start with the chart and the entry. So July 31st, entry just under 1480, stop was at 1238, under 1250. So this was a little bit wider of a stop. And what we'll do, we'll go to the bigger chart. So Tesla went on to the buy list starting in May. And then the most recent time that I looked at it was the end of June, where it was on the buy list here. I had noticed that Tesla had been holding this 20-day moving average. If we take a look on the chart, we can see that Tesla's been, every time it tested this 20-day moving average, it held and it went higher. So at this point, Tesla was on the radar screen. Now, another stock that I had on the radar screen the same week and the same time, and I took the position instead, was Livongo in the healthcare industry. So Livongo's turned out to be a pretty big winner. But so Tesla coming off the 20-day, and I missed it here. So once I took the Livongo trade, Tesla started to work right away, and Livongo didn't start to work right away. So what I had to first do was ignore the temptation to then start to go after the stock after it missed my ideal buy point. Now, Livongo's worked out well. I dialed back some gains in a Livongo at plus 100%, and that stock is currently at plus 88%. So that's worked out okay. So now what I had to do, because Tesla was the next name on my radar screen, was I had to sit through this and then wait for the next key entry. So what I wanted to do is wait for the test of the 20-day moving average. So I've got some other higher volatility names in the account. I've got Square, NVIDIA, Shopify. So I wanted to wait to get my right test. So it came down into the 20-day moving average here, and then it just started to hold the 20-day. So what I wanted to do is start to see the volatility contract and then turn back up. So I watched it here for a few days, and then on this red bar here, I took the position. Now what I did was Tesla, and I got caught in a little bit of a drawdown. So Tesla was coming off the 20-day. It opened up here, and it started to pull down, and then it started to turn back off the 20-day. So as soon as it started to turn back up, and that was about 11:30 in the morning, I took the position. And then about right after I took the position, maybe 15 or 20 minutes later, it seemed, the stock just started to get pulled down. So I took it coming off the 20-day, and looking like it was going to start to break out to the upside, and then it pulled back down. But my stop, if we take a look at the entry, my original stop was at 1238. So that was a little bit over 15%, which is a standard trend following stop. I run an intermediate to longer term trend following program. So my stops based on market volatility for these planned longer term positions, they'll often come in at 10 to 15% because this is a higher volatility stock. And I want it to be under 1250 because I understand the technical levels for Tesla. So I had my stop at 1238. And then the next couple of days, the stock tried to get over 1500 and it really couldn't. And then it started to pull down. So it had a 7.7% drawdown here. And if you remember, when I first took the position on the 31st, I identified 1350 to 1400 as a possible range that it could test on any pullback. Came down to 1365, so I knew that I was at what I call the make or break point. So it held 1365. Obviously, they announced the stock split, which has helped the stock. But in either case, it came right down to the level that I was expecting that it could come down to, which was also 1366 was the mid-July low. And then the stock started to head higher. So what's happened since there is I've held the position. Now I booked some gains yesterday, but if we take a look at some of the screenshots just to walk through the position. So here's the entry chart. We took a look at it coming off of the 20-day moving average with the stop loss down here. And then on the Twitter feed, also on July 31st, it was our chart of the day, best idea for subscribers. So basically what I did was I posted the best idea for subscribers, and then I took that position myself, which is often something that happens. And then the question came up online. So somebody asked me, there was a lot of stocks that were on my radar screen. What would make me take the Tesla position? And the key thing, and this is something that I've spoken about on Twitter quite a bit, whenever we take a position, we can always try to manage the risk through stop placement and position sizing. So in this case, I knew where my risk was because I identified my risk on the chart. So I've got a stop and I've got my correct position sizing in place. So I know that I stand to lose if I'm right X percent. So it worked out to be a little bit over 0.5% of equity in my account. But what I also knew with Tesla from looking at the past performance of the stock is that it had home run potential. So what happens when we take a position is if we can call risk X, and then we've got the potential to make many, many multiples of what our original risk is, then to me, that's good potential reward versus risk. So the trade started to work. And then on August 12th, so I had daily commentary on the stock, so I was holding it through the drawdown. But on August 12th, now the stock was at 1550. So I believe this was the gap up day after they announced the 5-for-1 split. So what I identified for subscribers was I identified the 1365 low. The stock was also fairly oversold based on the metrics that I use. And what I identified is if the stock could get over 1550, it could signal a move higher. And then I identified two risk levels. So for subscribers that were looking to take a new position, I identified 1365, which if we take a look on the prior chart, 1365 was the low in August, and it was also the low in mid-July. So I identified 1365, and then also the 50-day moving average, which if we take a look on August 12th, the 50-day moving average would be somewhere in this area right here. So I knew that coming over 1500 to 1550 could signal a move higher, because if we take a look on the chart, we can see that at 1550, the stock had stopped here. It failed between 1550 and then 1500. So I knew, as oversold as the stock was, that if it could get over 1500 to 1550, it could have a pretty big move to the upside. So then I highlighted this again for subscribers, where if they were looking for a position here at 1515, where I'd look for my risk to be contained at. And then if we take a look, and this is something I spoke about, so Tesla's been on the blue chip daily buy list so 9 times. So going back to May 31st, it was on the top 20 buy list, the daily best ideas list, and we can take a look. This is from May 31, so I posted it on the premium page at $835. And then it's been on the, every week I publish a top 20, right now it's at 25 stocks, but a weekly buy list. And it's not a watch list. These are stocks that I put on the list and identify these stocks as actionable at the market. And I've got quite a few of them. They've been names like Shopify and Microsoft. And also we go outside of technology. I generally have the list about 50-50, but at the end of the day, you can see that Tesla's been on the buy list 9 times. It was on the August 2nd buy list at 1,400. And I had it on the buy list. So even after it started to move higher, I still saw upside potential. So on the last Sunday's top 25 weekly buy list, I had Tesla there again at 1,650. So if we take a look, in a nutshell, I used a technical entry coming off of the 20-day moving average. I did have, they pulled it back a little bit, so there was a little bit of a drawdown there. I held through this 7.7% drawdown because I set my stop understanding how Tesla trades and understanding my threshold for volatility. I set my stop at such a level that I could ride through the potential volatility. It put in a low right in between the 1,350 to 1,400 range that I was looking for. And then it's been very strong since then. So I did dial back and I posted this online. So I did book some gains yesterday, just over 2,060. So I booked some gains at plus 39% in 3 weeks since the original entry. I'm holding the core position. What I want to do is I want to hold my strongest stocks as long as the trend still works. So I dialed back some of the position, but I'm still holding the core, and we'll see where it goes. So if you have more interest in the website, that was a deeper dive looking into one of the trades. But if you have more interest, it's bluechipdaily.com. If you go to the best trade alerts page, you can also see more screenshots to walk you through some of the trades that we've taken and what the technical rationale was behind it. If you go to the Join Now page, we're actively accepting new subscribers. You can see what the benefits are. We've got a premium Twitter feed that I'm on basically all day, every day, posting real time, my best technical ideas. Also, we do a nightly video, and we've got a 24/7 tracking sheet. So right on the website, there is a open positions and best ideas tracking list where every single trade and every single best idea that we post gets tracked in real time so subscribers can keep track of it. And we are actively accepting new subscribers. So I hope to see you on the website. We always have to touch base on the disclaimer. So I appreciate everyone's time, and I hope you have a great day.